Good morning. Today is Friday, September the 29th, and the last trading day for the weekend for the month itself. And the time right now is 9:54 in the morning. Overnight, we continue to see equity prices pulling back. But again, yesterday we have a bit of a correction in terms of a rebound. We can see that the Dow Jones has actually traded to a low of 33,306.3 on Thursday. And at the get-go yesterday, we have a bit of a rebound, and this rebound is still very tentative. And the good thing is that the market has actually done a three-wave corrective rebound that is symmetrical, meaning to say that the entire length traveled for the initial downtick is almost equal to the second leg of this pullback. So this actually gives rise to the possibility that this is simply a corrective pullback and nothing more than that, and there's nothing here to see, and prices should eventually go back to a high beyond 35,679. That is one view. However, if the market continues to slide over the next couple of weeks, especially this weekend, because there is a risk of a government shutdown in the United States unless they can agree to pass through 12 appropriation bills, which is highly unlikely right now because Congress is deeply divided, and that could actually damage the outlook for equity markets. So there is no saying that next week we may not see further downsides in equity markets. But for now, it does looks good because technically we have a support here at 33,420. The low is only 33,306 on Thursday. So that should give bulls a little bit of something to go by for this weekend. Okay, in the S&P 500, we also see similar move. The market has pulled back in almost a symmetrical pullback as well. Very neat three-wave pullback to 4,238 on Thursday. And yesterday we have a bit of a rebound, although the rebound wasn't very strong compared to the Dow, but we can see that it is still nonetheless an equality move. The target was 4,269 and the market went down to 4,238. Good enough, and the market should actually bounce back from here. And immediately the upside target is about 4,421 to 4,464 levels. So do watch out for this level. There's a bit of an error here. It's 4,421 here. And in the Nasdaq 100 itself, Nasdaq actually is a lot more resilient. We can see that although we have a three-wave pullback, but the three-wave pullback, unlike the Dow and the S&P 500, did not hit equality, which is currently at 14,224. So we are about 200 points away from the ideal target, but still nonetheless it is within a bracket of prices that should actually see the emergence of buying interest, and that level is 14,283 to 14,662.9. So again, this does looks good, but again, we are still very early on into October. October has traditionally been a terrible month for equity markets, so let's see what happens in the face of a continuation strike by the UAW, which is the United Auto Workers in Michigan. This is actually acting as a wet blanket going forward. And of course, October the 1st will also see student loan repayment coming back in a big way. So this is adding on to the misery for US consumers. And of course, a US government shutdown does not help matters. So all this is actually something that we want to watch going forward into October, and it does not look really good to me. Okay, and over in Asia, we can see that the Hang Seng has actually borrowed some strength from the Wall Street overnight bounce, and we can see Hang Seng right now is at 17,739 in the futures contract. The low so far traded was 17,381 in the futures contract. So for all that we know, market may actually rebound back. But again, we have to see whether the market can clear the first barrier to higher prices is 18,178. So we can see that there is a series of lower highs and lower highs. And if this bounce here does not result in a higher high beyond 18,178, it is possibly more of the same in terms of the trend itself. Okay, over in the Nikkei, we can see that the Nikkei 225 did not quite benefit from the rebound on Wall Street. You can see the prices are currently coming down. Last trade is 31,800. Of course, the market bounced off this bracket of prices at 31,540 to 31,680. So that should technically be some kind of support. But so far, this morning, price action suggests that there is no momentum behind this most recent bounce in the Japanese equity markets. And over in the currency market, we see that the dollar strength finally set. We have a high of 106.54 in the dollar index. And this is, of course, basis the futures contract. And we can see the market just fall short of the ideal target of 106.70 to 107.13 levels. And this pullback does look a little bit sharp, but then again, it is part of a possible corrective pattern, and they may not actually see a unraveling in the dollar. So I still see there is scope for the dollar to actually go much higher beyond what we have seen so far this week. So over the long term, we are still very bullish, or rather I'm still bullish on dollar, but in the meantime, there is a possibility of the market pulling back to the near term support in the rising channel here, probably around in the mid 105 levels. Okay. And in the euro dollar, of course, when the dollar pulls back, the other currency has a chance to actually rebound. And this is being seen in the euro dollar. We have seen a low of 104.88, and a bounce back is currently trading at 105.74. And this does looks a little bit corrective for now. Upside target is going to be quite limited, in my opinion. The best you can expect is possibly a retest of 107.38 levels to 107.70 levels. That's about the best you can do. It could actually fall short of that. So in the meantime, stay on the sideline and to see if you can get better prices to sell back in the euro dollars in the long term. Okay. In sterling, we see the same thing. Sterling managed to rebound from 121. 10 levels is currently trading at 122.16. Upside is going to be quite limited, in my opinion, because we have this falling channel here. And let's see what happens if the market hit the top side of this falling channel, and that could be around 122.5 levels. Over in the Aussie seems to be doing a much better job at a rebounding. We have a rebound from 0.6630, and this rebound right now is already up 100 pips at 0.6440, and it does looks good to challenge the 0.65 to 0.6535 levels. Dollar yen has finally come off the high at 149.70, but still it is very tentative. We do not see the same kind of pullback like what we see in the dollar index. So there is still a lot to be desired as far as any kind of meaningful correction in dollar yen itself. So right now, the market is still believing that the interest rate differential between the US interest rates and Japanese negative interest rate is likely to favor further upside in dollar yen. And if we continue to go higher, there is a possibility the market may challenge a 151 to 151.90 levels. So again, this is a very, very dangerous period because the last time the Bank of Japan came in to intervene was in November last year at 152. So that resulted in a massive pullback in dollar yen over time to 127. So can you imagine 152 to 127? That was a huge move. So be very careful chasing dollar yen ever higher. Do not try to test your luck by taking dollar yen much higher beyond what it is already currently trading. Okay, and dollar Canadian obviously has come off a little bit and currently it's trading at 134.90, not much to see here, and I think the top side could be around 135.70 to 135.90 levels. I think this entire move for 133.80 is very corrective in nature. I do see further downsides. Another challenge of 133.80 is not impossible. And over in crude oil, we can see crude oil finally breaks as well. Market went up to a high of $95.03, just short of the $96.13 to $98.43, which I envisage in the futures contract. But this is still part of an overall uptrend. So this pullback is seen to be likely to lead to a much better price for entry on the long side of the market. Market previously has held very well at $88.19. So there's a possibility it may retest this bracket of prices between $88.29 to $89.37 in the futures contract basis the WTI futures. And for gold itself, in the spot gold, we can see spot gold is currently going through a massive meltdown. This is getting a little bit more serious because the move here is very impulsive. And if we do get any kind of rebound, it's possibly going to be kept around just below 1900 at $1,880 or even $90 before we see a continued decline in the gold prices, possibly gunning for $1,820 to as low as $1,805. So again, I do see further losses based on what we see so far in the price action of gold. And silver is managed to hold itself pretty well. It did not melt down like what we see in gold prices. Market actually held at $22.40. And short term, I think there is a possibility of a bounce back to $22.91 to $23.14 before we see market consolidating further. Okay. And of course, in Bitcoin, there was a rally attempt. Market actually based itself quite well above the 26,000 levels. This morning, we see a move back to 27,000, and currently it's trading at $27,090 thereabout. But I think the market is going to be sideways most of the time because there is simply no major driver to cause prices to move either way. So more like the case, I think the market is going to drift going into next week if the US shutdown actually come into being, because the SEC will be supported by a skeletal staff, and any kind of paperwork to push forward applications for the spot BTC ETF is likely to be left in the limbo because of that. And this is all I have for you for today. In the meantime, you have a great weekend again, and I'll see you next week. Bye-bye. Take care.